Hey guys, hope you're doing well. This is HTrade. Alright, so this is a recap of where we are right now, and so far so good. We actually have on the 50k evaluation challenge, we are on $51,178.20. Let me just quickly show you the results. So this is trading from the 28th of November until the 30th of November. Well, 30th, which means it's today, obviously. And I didn't trade today, but I mean, it's all the trades from the 25th up until recent. Now, as you can see, my wins versus losses is actually not bad at all. Now, I'm aiming for a rough 1 to 2 risk to reward. And as you can see, total profit versus total losses is more or less in that range, which is actually great. I like it. It can be 1.7, 1.8, around that as well, because some of my trades are 1 to 1.5 risk to reward. So let's say, for instance, as an example, I risk 400 to make 600, or 400 to make 700, etc., etc. That all depends on how fast I enter on the trade that I take, because I enter on the 1 minute time frame, and I also may enter sometimes on the 5 minute time frame as well. So yeah, it all depends on the entry. It may sound ridiculous because it all depends on the direction that you're trading, but the entry does make a difference, especially when you enter in New York, when the price moves extremely fast. So it does make a difference. In any case, let's get quickly back to the charts. Right. So let me just quickly zoom out. Let me just do this. Right. So now we have our main chart in the middle. Right. So this was Friday. I didn't do anything on Friday because there was a very big news event on Friday. Let me show you guys. So basically on Friday, there was too many issues. Way too many issues. Friday was basically, what Friday was, the 28th, right? Right, so let's have a look quickly. So remember, I am a partner trader from Wesley Trades HQ. I'm gonna leave Wesley Trades Discord in the link in the description of this video below, and I'll send you all the links there as well, like the description to Wesley Trades YouTube channel, the Discord where we are right now, etc., etc. All right, so let me just quickly go back to where I was. General chat. Yes. All right, so there was an amazing amount of issues on Friday. CME, which is one of the biggest trading data or futures trading data providers in the world, had a data center issue. So obviously what happened was you can't nothing moved on the charts. Let me show you what I mean by nothing moved. So London Open actually started at 8:30 8:30 New York time, and there's no data between Thursday 21:30, which is 9:30 New York time, and Friday 8:30 a.m. New York time. No data, zero, nothing. Then I thought to myself, you know what? I am not going to waste my time on a Friday where the data is, you can't trust it. You can't trust the data at the end of the day. Plus it's a Friday, so I just stayed out on Friday. Thursday, however, was a very low volume day because it was a bank holiday. So it was basically a US public holiday called Thanksgiving. Now, let me show you the trade that I took on Friday. I actually did take a trade on Friday, but at the end of the day, let me just quickly go here, and then I'll go down to the 5-minute charts. All right, so we had our New York open. We took out the London low, very little. Take a look at the size of the candles, guys. There's like no volume. I mean, this is 10 points. New York open. Do you really think New York open would open the first candle on 10 points like this on a normal day? No, it won't. It will open probably something like this. You see, I kept the range. I'm not going to zoom in or out just to show you the difference. Take a look at this from 208 to 270. That's the first 5-minute candle. You see, this is 70 points. What? 60 points, more or less, in one candle. As to where this is 10. This is what, 10 points? 317? Roughly 17 points, 18 points. So the volume was definitely lower than normal. Any case, so what I did was I went down to the 1 minute time frame and I waited for my entry model because I wanted to look for a buy because we're currently on a 4-hour fair value gap. Let's go to the 4-hour to show you. We are bullish on the 4-hour 100%. We're absolutely bullish because we closed above that long-standing area that we've tried to close above it the whole week now, and we finally closed above it on Wednesday. So everything is, this whole move is bullish, right? So in any case, what did we do? So we created a very small inverted fair value gap here. Price went up, created two fair value gaps. We tapped into this last fair value gap here, went up. Price tapped into this fair value gap here, went up. Price is tapping into this bullish fair value gap now, and we just keep on going with the trend until it changes. That's how we trade. That's how we catch trades, right? So in any case, let's move back to 1 minute. Let's quickly move forward. So what I did was I waited for price to make another 1 minute inverted fair value gap from the bottom. Okay, here's a bearish fair value gap, right? I waited. We tapped again into this 4-hour fair value gap. We finally created this inverted fair value gap right here. And I took this as reference for my entry. We tapped into this fair value gap. And I waited for the next buy candle to be printed. So yes, I just waited for this one, right? Okay, we tapped through the fair value gap, but we didn't close below that fair value gap. So this fair value gap is still valid. You see exactly the same thing that happened here. Exactly the same type of movement. So we went down, we went up. We actually tested this bullish fair value gap. We tapped through the fair value gap, but we didn't close below it. And we printed a bullish candle, and you could have entered there and you could have exited somewhere here. But besides the point, it printed the bullish fair value gap, bullish candle there, bearish candle, and another bullish candle, and that's where I entered. So I entered there because it has to close above the inverted fair value gap, above CE. And my stop loss was here, and my take profit was here, round about here, right? So I waited, and got stopped out. And it is what it is. I mean, you can't really do anything about it. So what happened after that was we took out the latest low here and here. We tapped the fair value gap again. And wouldn't you know what happened next, right? We printed another inverted fair value gap. Okay, finally we printed the inverted fair value gap right here. This one here, because we first closed above it, yeah? From this point and onwards. Now, you can basically follow this inverted fair value gap. Yes, there's a bullish fair value gap, yeah, but if you took this trade and we haven't closed above this yet, and price just started going down again, that's on you. You have to wait for a full inverted fair value gap as a good indication, right? In any case, price created a new bullish fair value gap. We actually tapped into this fair value gap. Again, we haven't closed below it yet. Let me just quickly go on. Okay, now we close below it. Now there's nothing you can do. You can't, there's no entry here, right? We created another fair value gap. So you wait. You have to wait. And otherwise if you enter prematurely, you're going to be taken out like here, basically, right? So we create another fair value gap. Perfect CE tap right there on that inverted fair value gap. Now let's wait for a bullish candle to be printed. Boom, there it is. Right, could have entered here. Your stop loss would be below this fair value gap or below this candle or this candle body. Let's take it here. You could aim for 1 to 1.5 or more. It depends on your risk tolerance. That's completely on you. And you can't really expect much from a US public holiday, guys. You cannot expect much from it. You can't. You cannot. And boom, eventually you would have won this trade. But that was only now at the end of the session, basically. So what would have happened with prop firm challenges? Your trade would have been probably closed around here. You would have taken a small profit, and then the next day, for people that trades normal FX or Forex accounts, they would have taken their profit here. So the idea was good, but the volume was just very low. And the idea was solid because we were still jumping up and down from this higher time frame confluence, which is a 4-hour fair value gap. So yeah, that's it. That's it, guys. That's what I wanted to show you. So this idea was 100% valid. 100% valid. So at the end of the day, I took my loss here and I had my hands off, because you need to learn how to take a loss, right? So I risked 200 and something. I risked 210 or 220. You won't believe the commission that was taken from that trade. There's like $30 of commission on that trade, and so I took a total loss of 250 on that trade, which is insane. So yeah, that is really insane. You see these fees and commission. That's basically what they take on prop firm accounts, basically. So yeah. In any case, I'm still very positive on the account, and I haven't taken unnecessary risks. I'm doing very well. The thing with trading is when you lose yourself and if you lose your emotions, that's a complete loss. The reason why I'm saying that is if you cannot set out your own set of rules to keep yourself in check and you overstep those rules, then you basically have no control over yourself. That means you have no control over your account, you have no control over the way that you trade, you're over risking, you're gonna gamble, etc., etc. So the rules like this, when I stopped here, when I took my stop loss, is there for a reason, and that reason is account preservation. At the end of the day, this is a business. This is not gambling where you have a set amount of money and you can gamble with that total amount of money. No, because if you lose all that, you have nothing. Zero. Nothing. So that's why I'd rather take my loss like a man and move on to the next day. That's all you do to protect your capital at the end of the day. In any case, let me stop here. I hope you guys enjoyed this recap on my account at the moment. And yes, I'm very much in profit. So we need 1,822, 21, 8. Sorry, I'm trying counting backwards. 1,821.80 cents. So basically roughly 1,800, 1,820-ish do we need to price this account. So I'm very hopeful because next week, let me show you up next week. So what's coming? What's coming next week, right? So up next week, we have a lot of news. We have Monday, PMI. We have Wednesday, non-farm employment change. So they're basically discussing what amount they should use, right? There's PMI again at 10 a.m. EST. Now, Thursday, there's unemployment claims, more unemployment claims. And then Friday, there's core CPI. So this is going to be a massive news week, which means a lot of volume. And if you closely take a look at the daily time frame, where are we on the daily, on the higher time frame right now? We closed above this daily. Oh, not yet, not yet. Very, very close to close above this daily fair value gap. Right, very, very close. So the daily time frame in my eyes currently is bullish. The way that candle closed, what does that mean? We have a new daily fair value gap just below here. So what might happen on Monday? We may go down, take out this liquidity, tap into this fair value gap, or into this fair value gap. Well, that's a long way to run, right? So it's 25,473, 25,200. Well, that's not too far from a stretch. About 25,480, right? So if it runs down 200 points, we tap into this daily fair value gap. If we run down 400 points, we tap into this fair value gap. Now, remember what I told you guys in the past is that the bigger traders out there, the bigger institutions, they make use of the Fibonacci tool. Let me draw a high from this high to this low here. What do you see? So if I took the 0 to this point, what do you see? Price reverted into the 61.8 and tanked, right? Now what happened was, okay, tanked, went up a little bit again till there, also 61.8, tanked, came down, came up a little bit again, 61.8, again, tanked. Now what's happening? We closed above that daily high. So my best guess, beginning of next week, that we price might go up a little bit more and then start retracing to somewhere to this liquidity point or this liquidity point into these fair value gaps or into this, the body of this weekly candle basically, or whatever, besides the point. So the bigger corporations, trading corporations, is going to make use of the Fibonacci tool to buy from discount. So just keep an eye on the Fib tool. That's very necessary because now since we bought so much here, so price can tap into this and go up. Price can do this or this, or my personal favorite, this. So yeah, possibilities are endless at the end of the day. So don't underestimate higher time frame, guys. Do not underestimate higher time frame. The daily fair value gaps, the weekly fair value gaps and the 4-hour fair value gaps. 4-hour fair value gaps are good, but then it must be with the current direction that you are currently trading. So there's a daily fair value gap here, and I can easily see this daily fair value gap being broken. We tap this one easily. If you go down to 4-hour time frame, very easily. So it's just a matter of time, literally. Literally now we just have to watch what price do next. In any case, I'm going to stop myself. I always get carried away when I talk about price action because I like talking about price action because of how I study price action and how I see where price is reacting from and why. So I love to do this to test myself as well. In any case, hope you have a great Sunday, guys, and I'll check you again on Monday. Cheers.